Hey everyone, and welcome. Today, we're going to tackle one of the most fundamental tools in a trader's arsenal, the trendline. Seriously, whether you're just starting out or you've been doing this for years, really nailing this one concept can completely change the game. So, you open up a price chart for the first time, and what do you see? It's just chaos, right? A total mess of green and red lines going everywhere. It looks like random noise. And you're sitting there thinking, how on earth am I supposed to find any kind of pattern in that? It's easy to feel lost. Well, that's exactly where the trend line comes in. Think of it as your secret weapon for cutting through all that noise. It's a super simple tool, but it's incredibly powerful. You just connect a few key dots on the chart, and suddenly, bam, an actual story starts to emerge. You can see the direction, you can feel the momentum, you can spot the opportunities that were hiding in plain sight the whole time. All right, so here's what we're going to cover. First, we'll see how trend lines bring order to that market chaos. Then, and this is crucial, we'll get into how to draw them the right way. After that, the fun stuff, trading bounces and breakouts. We'll also cover how to avoid the dreaded fake out trap. You know the one I'm talking about. And finally, we'll see how this all gives you a completely new lens to view the markets. So let's jump right in. Part 1, Order from Market Chaos. You might be wondering, why do we even need these lines? Can't I just look at the chart? Well, a trend line is so much more than a simple arrow. It's really a dynamic roadmap for where the price could go. So, why do these simple lines matter so much? Well, first off, they just flat out tell you the market's overall direction, cutting through the daily wiggles. More importantly, they act like a moving or dynamic level of support and resistance. This is huge. It helps you pinpoint potential trade setups you would absolutely miss otherwise. And maybe the most critical point, when a strong trend line finally breaks, it can be the very first alarm bell that the entire trend is about to shift. Okay, part 2, Drawing lines the right way. Now listen, none of the cool strategies we're about to talk about are going to work if you just draw these lines anywhere. There's a right way and a wrong way, and getting this right is, well, everything. So let's get into it. It's actually a pretty straightforward 3-step recipe. Step 1, find the major swing points. We're talking the big, obvious peaks and valleys on your chart. Ignore the tiny little jiggles for now. Step 2, you need at least 2 of those points to create your first line. That's your anchor. And then step 3, this is the secret sauce. You adjust that line just a little bit to get the maximum number of touches. See, the more times the price has respected your line, the stronger and more valid it is. This, of course, brings us to the great debate. Should you connect the very tips of the candle wicks or the main candle bodies? Honestly, you're going to find pro traders who swear by both methods. Some want that wick-to-wick precision. Others say connecting the bodies gives you more touch points. Here's the real answer. It doesn't matter which one you choose as long as you are consistent. Pick the one that makes the chart look clearest to you and stick with it. And that leads us to probably the single best piece of advice you'll ever get about trend lines. Don't think of them as a perfect razor-thin line. Think of them as a zone or an area. Price doesn't have to tap it to the exact penny. If it gets close and reverses, that counts. Shifting your mindset to see a zone instead of a line will save you so much frustration and prevent you from getting stopped out on a meaningless little price spike. All right, part 3, Trading bounces and breakouts. Okay, so we know why they matter. We know how to draw them. Now for the really good part, how do we actually make trades with these things? It really boils down to 2 main strategies, the bounce and the breakout. First up, strategy number 1, the bounce. This is what we call a trend continuation trade. Basically, you're betting that the trend is strong and is going to keep on doing what it's been doing. You're swimming with the current, not against it. So, how does it work? You've got your trend line and you can see the price has respected it a few times already. Now, you watch as the price pulls back and approaches that line again. In an uptrend, you're looking at that line as a dynamic floor or support. You'd enter a trade expecting the price to bounce right off that zone and head back up. Simple as that. And then we have strategy number 2, the breakout. This is the complete opposite. It's a trend reversal strategy. Here, we're not hoping the trend continues. We are actively looking for the exact moment it dies and a new one is born. With this one, you're waiting for price to smash right through that trend line you've been watching. A clean break tells you that the old structure is broken. The balance of power between buyers and sellers might be shifting. This can be a huge opportunity. But, and this is a big but, this is where most new traders get absolutely crushed by fakeouts. Which brings us to probably the most important part of this whole explainer. avoiding the fake-out trap. Look, being able to spot the difference between a real breakout and a nasty trap is a skill that will literally save you so much money and heartache. Let's dig in. Picture this. You see the price finally push through that line. Your pulse quickens. You're thinking, is this it? Is this the big one? That's the moment of truth, and you have to be able to answer that one crucial question. Is this for real, or am I about to walk right into a trap? So how do you tell the difference? Well, a fake out just looks weak. It's usually small, choppy candles. There's no real power or momentum behind it, and often the price will just limp across the line and then snap right back. A real breakout, on the other hand, is all about energy. You're looking for big, powerful, decisive candles that close firmly on the other side of that line. That's conviction. So, how do you boost your confidence? Simple. First, wait for more proof. Don't just trade the line break. Wait for the market structure to break too. Second, look for that powerful momentum we just talked about. If the move looks weak, stay out. And third, it never hurts to get a second opinion. Maybe check a momentum indicator to see if it agrees with the breakout. Okay, we're heading into the home stretch. Section 5, a new lens on markets. I want you to think of this not just as a tool, but as a completely different way of seeing things. And here's the real takeaway. A trend line isn't just another indicator you slap on your chart. It's a new way of seeing the market itself. It's about learning the language of the charts. When you master trend lines, you're mastering the absolute foundation of all technical analysis. You really do start to see the market in a completely different way. So let's quickly recap your new toolkit. You know how to use these lines to create order from chaos. You know the 3-step process to draw them with purpose. Find the major swings, connect them, and get the most touches. You've got 2 main plays: trade the bounce for continuation or the confirmed breakout for a reversal. And most importantly, you know to always question the strength of a breakout before you commit. Look, by learning this one simple tool, you've gone from seeing pure noise to seeing structure, direction, and genuine opportunity. The charts are no longer just a bunch of random squiggles, they're a map. And so the only real question left is, now that you can see the lines, what are you going to discover? This image is for illustrative purposes only. To gain a deeper and more structured understanding, join my community where you will have access to comprehensive materials and detailed guidance.